soft market has seasoned underwriters and managers wary of cheap business and, as a result, has them much more inclined to walk away. Tom Curtin, Chairman, CEO, and founder of CRC, the largest wholesale brokerage firm in the nation, sat down with Insurance Journal at the recent NAPSLO Annual Convention in San Diego to share his thoughts on the state of the industry.
Excess capital is usually what causes soft markets in the insurance cycle. After Katrina hit in 2005, everybody thought capacity was going to evaporate, disappear, and then the world recapitalized for 06, no storms in 06. So everybody that played in the cat property business at least made a lot of money. And then in 07, no storms again. In the fall of 07, the market really started to move south hard. And in 08, it really has been in free fall, especially on the property side, but in all lines. Generally, there's been a slowdown in business. There is less new construction, new wraps, builder's risk. And so consequently, the capital that was supporting those lines has redeployed itself and now is in general liability, products, transportation, and it's just driven the prices down.
Yeah. It doesn't seem to be changing either. It's kind of a convergence of the collapse of the housing market ruined the construction industry, and it's gone downhill from there.
Well, the first 6 months, 7 months of the year, it was dramatic. 15, 20, 30% reductions. Yeah. In some cases, 40, 50% reductions. We've noticed in August that has plateaued. August is such a small month compared to the rest of the universe, but it sent us a signal that it had really plateaued out. A lot of discipline now is coming back into the market from seasoned underwriters, seasoned managers, and they're walking away from a lot of this business. If it's just too cheap, they're letting it go. We think that fourth quarter will be down, but we don't think we're going to see big moves into further softening, and we really think that in the next 6 to 9 months, we're going to start to see some firming and some prices going back up.
I've heard also that third quarter results for the reinsurers are not very good.
Well, and the capital universe is in a very big state of turmoil right now. Yes. So I think everybody's trying to sort out exactly where they are. All of these things are going to come through as pretty tough results for the third quarter. Fourth quarter is anybody's guess. There's $9 trillion worth of mortgages to be reset next year. The markets have got a ways to go yet, I think.
Okay. So it's really hard to tell, but it could change dramatically again. As quickly as it came, it couldn't leave as quickly.
Absolutely. Yeah. Absolutely.
Okay.
We have been through many of these cycles in the 26 years that CRC's been around, and when we started the business, wholesale used to be a market of last resort. Now it's very much mainstream, and a lot of the business that we place in the marketplace is admitted business. It's not just surplus lines business.
Let's talk a little bit more about that. Yeah, and can you give me some instances and some lines of business that are you're not the market of last resort?
Oh, absolutely. Excess casualty, where we do, $50, $100 million worth of limits on large commercial insureds. Not at all the market of last resort. And a lot of the standard carriers have come to the wholesale universe as a distribution channel. And so the standards markets see us as a way to capture some volume that they wouldn't otherwise be able to have.
Yeah. How do you see the E&S industry, for lack of a better term, because it really does encompass a lot more than just excess and surplus. Right. But how do you see them aiding retail agents and brokers in this soft market?
The companies come to us in order to, number one, cut down on the number of sources that they have to do business with. So we're a very efficient way to do business. And when you're owned by the 14th largest financial services company in America, none of the companies ever worry about the checks clearing. So, from a financial perspective, we are a good and viable option. The retail agents like to come to us because, You know, we know all the questions to ask. We get the submissions in a proper order. Everything's now done online. We send discs and through email. Everything's digital now. Not a lot of paper happens.
How are you going to grow CRC now? You're so big now.
Well, we're going to continue to acquire. The bank likes the insurance business.
Okay.
And so I think consolidation will be the order of the day.